How to choose an insurance deductible. When it comes to saving money on your car, health or homeowners insurance policies, one of the quickest ways to reduce your monthly premium is to raise your insurance deductible. But that can be a tricky decision that's a matter of savings versus psychology. Before you sign up for the highest possible deductible, you would be wise to consider just how much you'd save on your rates and whether you are financially and emotionally prepared to part with your cash if you do have to make the claim. You want a deductible you can live with. Even if you can afford a high deductible, you still may prefer a lower one. Often people come back after they've paid $500 or $1,000 for their deductible and want to revisit their decision. They realize that to actually spend that money is a lot more painful than they thought it would be. Other consumers try to use the threat of a big expense to their advantage and deliberately go for a high insurance deductible to help them resist making claims. Claim frequency can be used against you and can raise your insurance costs. You can use a high deductible to save you from yourself because you're less likely to make the claim when you have to spend your own cash for the deductible. Making fewer claims could increase your affordable insurance options. The math on deductibles by insurance type. While the psychological quandary of raising your deductible depends on your tolerance for risk, the math to calculate your potential savings is simpler, though it varies by insurance category. Auto insurance. On an auto insurance policy, you are not always saving the lot on your premiums with a higher deductible. For example, on a 2010 Toyota Prius, you would save about $24 to $30 annually by raising your comprehensive insurance deductible from $250 to $500. If you had to make the claim, it would take you years to recoup that extra $250 through premium savings. If your auto insurance premiums are high, first choice would not be a high deductible on comprehensive coverage, which pays for damage from theft and disasters. Compared to those sorts of things, accidents are easier to avoid. We recommend raising the deductible on your collision coverage instead. Controlling your driving habits can minimize the chance of an accident. The amount you can save with a higher collision deductible depends on factors including your age. If you are a mature 50-year-old driver with a clean driving record, you might only save $20 to $30 per year on your auto insurance premiums by raising your deductible from $250 to $500. But if you are a younger driver, you might be able to save as much as $250 or $300. Higher deductibles equal more out-of-pocket expenses. There's no doubt about it. Having high comprehensive and collision deductibles on your car insurance policy will mean paying more out-of-pocket if you run into a streetlight or your car is stolen. But high deductibles also mean lower rates for your monthly or biannual insurance payments. So many people suggest pumping up your deductible to save money. By doing this, you're assuming more financial risk behind the wheel. Will raising your deductibles really result in that cheap car insurance policy you'd hoped for? Let's say you've got a $1,000 deductible on your new car's comprehensive coverage when a tree branch falls on your car's roof, causing $700 of damage. Since your deductible is $1,000, it doesn't make any sense to file the claim, so you just head to the body shop and soak up that $700 repair bill on your own. If you do decide to save by raising your deductibles, make sure you set some money aside in an interest-earning account. That way you'll have the money handy should you ever need to file the claim with your car insurance company. Lower deductibles lead to better coverage. Now let's say you revised your deductible before that tree branch fell, this time electing for a $100 deductible. Doing so bumped your monthly car insurance premium up, as well as your 6-month total. But now you can file the claim, pay just $100, and have your insurance company handle the rest of the bill. It's your choice. If you do need to file the claim, you'll be over the moon if you lowered your deductible and paid slightly higher monthly insurance rates. If you'd like expert help choosing the car insurance deductibles that feel right for you, we're happy to provide it anytime. Home insurance. The differences in premiums when you raise the deductible for a home insurance policy are relatively small. You'd save around $85 per year by switching from a $200 to a $500 deductible and save around $80 annually by switching from a $500 to a $1,000 deductible. If a $1,000 deductible would bankrupt you, then you should take the lower deductible. If you chose a $200 deductible and had a claim for $350 in damages, would you turn it in? If not, then I would recommend you choose a $500 deductible. You just need to stop and weigh what you would or wouldn't be able to handle. You may not have much leeway. Some insurers now have a mandatory home insurance deductible of $1,000. Health insurance. Health insurance deductibles present a more complicated question, particularly for families. You not only have to calculate the deductibles and copays for each individual who's covered by the policy in order to figure out the maximum exposure you have to out-of-pocket expenses, but you also have to check the maximum annual limit of coverage. You need to review your family's typical health costs before you can compare health insurance policies. Anyone should take a higher deductible on health insurance, except maybe a person who's alone on an individual policy. The risks are just too high if you're insuring a family of 5 and you each have a high deductible. If all 5 family members were injured in an accident, it could be extremely costly. Health deductible insurance. Many health insurance plans today have something called a deductible, which is the amount you must pay for covered healthcare services before your health insurance company begins to pick up the tab. If your cost exceeds that amount, your plan will cover the remainder, or a percentage of the remainder. If you're in the process of choosing health insurance plan, it is useful to know that plans with higher deductibles tend to have lower premiums. Example of health deductible insurance. Deductible is the amount you must pay for covered healthcare service before your health insurance kicks in. Example: if Jake's deductible is $2,000, his insurance won't pay for anything until he has paid $2,000 for covered healthcare costs. If he requires hospitalization that costs $3,000, he would pay the $2,000 deductible, and the plan would pay for a portion of the remaining $1,000. Based on J plan specifics. Another example of health deductible. Here are 5 important things to know about health deductibles. Having health insurance can lower your costs even when you have to pay out of pocket to meet your deductible. Insurance companies negotiate their rates with providers and you'll pay a discounted rate. People without insurance pay, on average, twice as much for care. Health insurance deductible is different from other types of deductibles. Unlike auto, renters, or homeowners insurance, where you don't get services until you pay your deductible, many health insurance plans provide some benefits before you meet the deductible. All marketplace plans cover preventive care, screenings, immunizations, and other preventive services are covered without requiring you to pay your deductible. Many health insurance plans also cover other benefits like doctor visits and prescription drugs even if you haven't met your deductible. In 2015, there's a $6,600 maximum for individual out-of-pocket costs for in-network services. The maximum for families is $13,200. Even if you choose a high-deductible catastrophic plan, your out-of-pocket costs should not exceed this limit. Over 70% of marketplace plans have deductibles under $3,000. When you choose health insurance plan, it's important to understand what your insurance company covers without requiring you to pay your deductible. Then you can decide whether you want a plan with lower monthly premiums and higher deductible, or one with a higher monthly premium and a lower deductible. Copayment. Your copay is the set amount that you pay for a healthcare service, like a doctor visit, or a trip to urgent care. The amount depends on your plan and the type of service you receive. Keep in mind that if your plan has a deductible, you may be responsible for meeting your deductible first. Then, your copay will take effect. In addition, prescription medications also require copays, and they will vary depending on the medication and formulary. Example of copayment: set dollar amount you pay for a covered product or service. Example: Sylvia has a $25 copay for visits with her primary care physician, PCP, and a $45 copay for urgent care visits. What does that mean? She will pay $25 for every doctor visit and $45 for every time she goes to urgent care. Coinsurance. Coinsurance is the percentage of the bill you pay for a covered product or service. Unlike a copay, which is a flat amount, coinsurance is based on the cost of the service. If your health plan has a deductible, the coinsurance is the amount you're responsible for after your deductible is met. If you receive services from an out-of-network doctor, you may be responsible for additional charges above the coinsurance. An example of coinsurance: the percentage of the bill you pay for a covered product or service. Example: let's say Hank visits his in-network doctor when he's ill. He has already met his deductible, and his plan now requires a 20% coinsurance. The cost of his insurance plan's contracted rate is $150, so he owes $30. His insurance company will pay the rest. Out-of-pocket max. Many people don't realize that every health insurance plan sets the maximum for the amount you will have to pay, referred to as the out-of-pocket maximum. Once you have reached your out-of-pocket max, your health insurance company will begin to pay 100% of your costs for covered care. Different plans have different out-of-pocket maximums. Out-of-pocket example. Alice's out-of-pocket max is $5,000. That means that in 2015, once Alice pays a total of $5,000, which can take the form of her deductible, copays, and coinsurance, her health insurance will begin to pay 100% of her costs for covered care. Emergency room, urgent care, or primary care physician. While you may be familiar with the terms emergency room, urgent care, and primary care physician, do you know which to visit for a health issue, and when? Deciding the best course of action can be critical in getting you the most effective care for your medical needs. The primary care physician knows your medical history and can treat you with your unique health needs in mind, while an urgent care can be very convenient when your doctor's office is closed. Of course, the emergency room is the best option when immediate care is needed. Making the right choice can also save you money. While you should always go to the emergency room for serious health emergencies, visiting your primary care physician will cost less and is a cost-effective option under normal circumstances. An example of all health costs. In the end, it's your call. Some people are simply not comfortable with a high deductible for any type of insurance because they don't want big out-of-pocket costs for something that's not their fault, such as an accident caused by the other driver or storm damage to their home. But the premium savings from a high insurance deductible could allow you to build up a larger emergency fund in the bank, so that you're self-insured to a degree. Still, you have to consider how much you are willing to sacrifice of your money before the insurance benefits kick in, and then balance that against the savings you'll receive on your premiums.